Greetings to fellow traders. Thank you for coming to this session. Okay, the agenda for today is taking full advantage of precise trading zone. Okay, and in fact, the market has been pretty dull, and so we would be trading live trades provided there is a signal. Otherwise, we will be discussing on the topic. Okay, whatever we are going to do is purely education, and please stick to the rules when you take your trades. Okay, let me show you the screen. Okay, the crosses which we will be focusing in is mainly Euro USD, Pound USD, USD CHF, USD Yen, USD Canadian, Aussie US, and New Zealand US, and Sing Dollar, and even Spot Gold. So you can use this session to have a discussion on any one of these crosses against each other, right? So we can discuss on what is it you're looking forward on that particular instrument. How can we take trades due to this? In fact, if you see the net change, in fact, today has been a pretty dull session. Even since yesterday, because yesterday there wasn't any US data out, and this week I do expect the market to be pretty quiet. In fact, next week, Monday is a US president holiday. So chances are, the market is going to be a bit choppy, and try not to expect too many big moves on any of these markets, especially on the forex. And we also have a Lunar New Year coming in next week also. So a lot of Chinese players will be out of the market. So I think this is the time, you have to spend your time analyzing the market, and you must also remember that you should be trade the market and not your expectations or emotions. And also what we will be doing is, I would also be giving a trading tip every day, that means every session with this, because this is a session whereby you can use it to learn and also learn to control your emotions and come up with a specific game plan or strategy. Okay, the trading tips which I'm going to tell you or talk about today is trend is a friend. Okay, I'm sure many of you have heard on this particular sentence. Okay, trend is your friend, but it's a very vague sentence, because you must understand what does this sentence mean and how do you take trades based on this sentence. See, different people will follow different time frame. So what happens is, our report we publish on 3 different time frames. Okay, mentioning on the hourly, daily, and weekly. So when you follow the trend, okay, you must understand the sentence well, or you must fully understand how it works. Because sometimes what happens is, the daily trend can be up, but the hourly can be down. So, if you have in your mind or registered in your mind saying that, okay, this, like for example, this Euro USD, okay, it has been coming down. Okay, you register yourself telling that eventually it's going to go up. So probably you might have read on any articles, newspaper or magazine anywhere, saying that, okay, the euro is going to hit 145 or even 150. But you must understand that it might drop down before the market eventually goes up. So what you should be telling yourself is, or what you should be fully understood is, whether, if it's going to, the hourly is going to come down, then you can wait for better price levels, meaning in the sense, you expect the price to come down. You can expect the price to take trade on cheaper, that means better levels. So sometimes your patience does pay you a reward, meaning in the sense, sometimes you wait for that level. It would be rewarding in the sense, rather than you take your trade, or rather than you force yourself to take a trade to go against the trend, or sometimes even I do know clients whereby they write to us saying that this email, sometimes when they get caught, meaning in the sense, like for example, they have read on an article saying that the euro is going to go up, and they go along, and when the market starts to drop or falling, they would start to get panic, meaning in the sense, at only the certain level whereby they can hold on to that pressure. So I think this is not a good way of approaching the trend. Approaching the market. So you must understand this sentence well, and tell yourself, ask yourself, what kind of trend you are following. See, it can go as low as even a 1 minute chart. You can follow a trend, meaning in the sense, you follow a 1 minute chart, you take a trade. So you know that your trade is going to be only, maybe 10, 15 minutes or even half an hour or 1 hour. So you must understand this sentence well and try to uh, uh, apply that theory always, because like whenever you go against the trend, chances are uh, you would be stopped out if you put stop loss, or otherwise you will get caught yourself and do not know what to do in the long run, right? And in fact, the crosses today we are looking at, in fact, most of the crosses are pretty flat. Okay, let me get back to that screen. Most of the crosses are pretty flat, and what I see is, the dollar yen, in fact, the yen is pretty weak against the most crosses, but it is within the range. So, this is one way, even though it can be weak or strong, but as long as it's trading within the zone, chances are, you should know that you should not go against the trend or against the trade. So what I'll do is I'll show you a sample of the report for you to see. And what is so special, because since, like as I told you earlier on, the market is quiet, so we have to trade, and we don't believe in in taking trades. Let me show you that screen. We don't believe in taking trades without knowing your risk reward or a specific levels for you to take. Maybe let's look at this example. I think the previous example I was talking about spot gold. So maybe now let's look at this example on this New Zealand US. Okay, so our report is, what it does is basically it talks about numbers, right? And you must understand well, is because this is a number game. Eventually this is a number game, and you should know when to trade, when not to trade, and when to enter, when not to enter, and when to put your stop loss, when not, or where to put your stop loss. All this is what makes you a trader, a better trader or successful trader. So let's look at, I'll just run through this example quickly. Then later on, I'll go through your questions, pertaining to any markets which you are interested. We can discuss and we can learn as a group. So this New Zealand US, the previous close was 68.30. So basically, we use this level as a benchmark. So this level is the US closing price, which was the New York closing price. So for instance, if you start looking at the market now, if you feel that the market is trading below the previous close, you should know that the market is pretty weak. But again, you must understand that sometimes the trend can be doing some consolidation. So that's where you must understand where is the level that is going to hold for the price to go up or down. And we talk about the trend on 3 different time frames, as I told you earlier on, the hourly, daily, and weekly. So let's look at this hourly. This hourly trend has been corrective down, while 69.20 holds. So basically, what this statement says, or what this phrase says, is the word corrective down means the market has been down, but is towards the end of that down move. See, sometimes you must understand that the trend has got 3 different phrases, meaning in the sense when it goes down to up or up to down. It can be the beginning of an up move. It can be towards the end of that up move, or it can be even somewhere middle of the up move, whereby you can see the market going higher and higher. So on this scenario, what we are saying is it's corrective down while 69.20 holds. So what we are saying is overall is the market has been pretty down for some time. So if you want to short, please be extra careful. So, but as long as the 69.20 is not breached, you expect the price to make lower lows or even consolidate. But you have to be, whenever you sell, you have to take note that you have to be very nimble on this trade, because it is towards that end of that down move. So on the daily wise, it's also saying the same. It's also giving you the same picture. It says corrective down while 70.40 holds. So that means 2 time frames are being down or have been moving down, but it is towards that end of that move. So there's 2 things you can interpret this statement. One is either if you are if you are an intraday trader or you're a scalper, you can go for a quick short. But if you are a short-term trader or you are planning to hold your trade overnight, then what I would suggest is wait for the market to come down, and when the market turns then you can go long or buy. So that's how you interpret this words and this statement. On the weekly wise, it says sideways down while 73, 75 holds, which means that overall all the three time frames are down, but the hourly and daily are towards the end. That means, it's going to have some pullback, so you have to be cautious if you are a seller or short. After you have known the trend, you can skip, you can look for this economic calendar, whereby, because we tell most of our clients not to trade whenever there is important data announcement, because most of our clients, they use 35 pip stop loss. So sometimes when you put a stop, chances are you might be stopped out when you use that kind of stop. So it's a humble request not to trade when there's data, unless your stops are bigger, meaning in the sense at least about 50 to 70 pips, then you can trade during data announcement. So after that, you have a section 2 or page 2. This is where, we tell you what to look forward to and what is to be expected on the market. So this market summary here, it says, based on our report, what has happened the day before. It says closed at 68.30 below the and was within the 5 days trading range. The high was precisely at precise traders resistance zone 1, and basically this is the history. You have to pay attention mainly is trend, daily patterns, and today's categories, because this is what tells you what to look forward to and how you can be a trader for this particular instrument for the day. So the trend wise, the hourly oscillators are bearish but weak, and price is below the moving average. So cautious approach is needed for the bears. So early on I said, it's saying corrective down. So again, we are saying that even the oscillators are supporting our view, meaning in the sense, it is approaching down. So you have to be careful, especially if you are bearish. And the hourly trend is corrective down while 69.20 holds. Daily trend is also corrective down while 70.40 holds. So expect the price to be choppy and the downside may be limited. So overall, what we are saying is, if you are a seller, be careful. That's what we are telling, and that's what we are giving you a warning, right? And the daily wise, okay, this can be the boundaries for the day. That means, if you see the market moving up, it can be the maximum high for the day you can expect is 69.35 or 69.85 or even 70.30. The price seldom goes beyond this level. So what you can do is use these levels to use as a benchmark or a guideline, especially if you are a short-term trader, especially if you hold your positions overnight. These levels can be used as your stop loss to learn better on or to protect your trade. And as long as the low boundary wise is concerned, it's 68.05, 67.60 or 67.25. So please pay attention to this level. Since if you are bullish or if you are looking for a buy, then this can be the levels to be considered for the least risk trade that you can look forward to. The categories or the sections which you have to pay more attention is the patterns and today's strategies. So the patterns wise, the daily trend was within prior day's range. The hourly trend has been in a range trading, and expect a choppy session until the breakout. Later on I can show you the chart, because basically all the analysis we do is based on, especially on the hourly, we use the 2-hour chart. So I can show you the chart and you can see for yourself what has been trading or how has it been trading, so that whether to support your statement. And 69.20 or 69.80 are the critical levels to watch to maintain the bearish outlook. So as long as the price is below this range, so you should know that the price is expected to make lower lows. But again, as I told you, the downside may be limited, so you have to be cautious on this trade. And on the 5-minute is along the horizontal channel with no clear indication of the direction, and the price patterns are suggesting that it may bottom soon. So cautious approach is needed for bears. Again, we are warning you, saying that if you are bearish, please be extra careful. And the opening price principle are mixed, so cautious approach is needed. So again, we are telling overall is you have to be cautious. So when we say cautious, there's two things which we can do. One is you can stay away from the market, or you take a trade, like you make 20-30 pips, what I suggest is try to book your profits, So that should be the way to interpret this sentence and look forward to take a trade. And these are the levels whereby most of our clients use this to take trades for the least risk reward. I mean, a least risk entry. So the bulls, if you are bullish, you can long near this level or at this level, 67.90 or 7.30. If you're bearish, then try to sell at 69.20 or 69.80. So this conservative traders, these are the two types of traders where we most we focus on. So if it's conservative traders, sideline, strictly trade only at our report levels. Aggressive traders trade the bulls and bears levels only. That means you only trade, you only long or short at this level, not at any other levels. So when you do that, chances are two things will happen. One is in fact three possibilities or three probabilities. One is you take a trade with the least risk and with the profitable trade. Another one is you might miss the price or you may not even enter the price, which is sometimes you do it every day, consistently. The opportunity is there and always you would be with the least risk. The third one is probably if you take a trade with a 30-35 pip stop loss, chances are especially if you're stopped out, at least you know that okay, this is your capital is protected at all times. So now let me get back to this screen or look at our report to analyze or how to start the day by looking to take a trade. You start off the day by looking at the last price, what is it trading, and see whether the price has moved out of this zone 1's levels. Okay, we call it a no man's zone. The zone 1 is resistance. The price, as long as the price is within the resistance zone 1 and support zone 1, the price we call it a no man's zone. So as a result, when the price moves to this area, okay, most of the time you see the market is very choppy, and chances are, you would be stopped out if you use a 30-35 pips stop loss. But if you use about 60-70 pips, if you notice the between these levels is about 50 to 60 pips, or even sometimes 70 pips. It depends on the market levels. So if you use this, then chances are you can take a trade and you can start making money, but provided of course your risk versus reward must justify your trade. And also do take note that most of the time the high or low for the day would happen at any one of these levels. Most of the time, I said most of the time and not always. So here, if you notice, for example, if you see the high is at 68.55, then you should know that chances are, the market would have a selling pressure, and once the 68.05 gives way, then I can expect the price to go down. But sometimes that the zone 2 will also happen as your high and low, but seldom goes beyond that level, because this is also I use this levels for me to gauge the strength and weak for the day. This can be for me to give me a comfort zone in take your trades. So another thing is you have about 12 levels, so you can use these levels to book your profit or re-entry. So here, like for example, let's assume I've longed at 68.55 or 68.60. So when I do that, I have a 3 resistance target levels. This is where I have to watch out, or I have to get ready to book my profit. So it's two things. One is I have to pay attention when the price is reaching at that level. Another thing is I can decide to book my profit if I'm not comfortable in holding on to that trade. So I have an immediate resistance which is 68.70, and the next resistance which is 69.60, and we have a 70.10. So in fact, we have 3 levels if you are long to book your profit, plus the zone 5, which we call it a U-turn zone, right? So this is where you can expect a strong resistance in the event the price moves higher. So in other words, we have 4 levels to book your profit if you are long. So if you have been looking at our reports and not trading on this, so you should know that even though it is a numbers, all you see numbers, but these are the 4 levels for you to look at to take a trade or book your profit. And also do take note that when the price moves higher, that means, like for example, this 69.35, when the price moves to 69.35, and when it falls back, your previous resistance will now become as a support. So I do have a immediate support of 69, minor support, which is 69.15, 68.95, and of course the major support would be 68.70 and 68.55. So this levels, can be used to take your trades, put your stop loss, entry, exit, all this, based on this level. So as I told you, end of the day is you must know that this is a number game, and you have to be precise on these numbers and take your trade. And also do take note that whatever our numbers, okay, these numbers, you have to use plus minus 5 pips on all the majors, because different brokerage firm will have a different spread. But for the other crosses, like for example, like pound Aussie, pound yen, the spread, because of due to the wide spread, the variance would be about 8 to 10 pips. So whatever our levels, you have to use plus minus 5 pips to take your trades, or for entry, exit, and stop loss. Basically, that's how you use our trade, and it's so easy. I mean, end of the day, it's like you must understand that even though there's got so many numbers, but it is very easy to interpret and very easy to use, because when you do that, chances are you would not be your emotions would be at bay, meaning in the sense not as what you trade. Like sometimes like I do not know what kind of trading strategy or game plan you have, and what I believe is it's better to not to trade on market orders unless if the market moves to that level. Otherwise, try not to take to market orders, because chances are you might expect a consolidation move. So as a trader, you should know when to enter, when to not to enter, or when to stay away from the market, and when to add on, when to all this what makes you a successful trader. So to have this, knowing the zone levels, it would really put me off in all most of the bad trades which I was doing previously before I was looking at the report. Okay, now let's get back to that market again, and let's discuss on the live markets, because I'm not looking at any live trades today, because as I told you here, if you look at it, the net change is less than about 30 pips. In fact, most of the markets are flat. So this is a scenario. This is a typical scenario, especially when during Asian sessions, and especially like too many holidays are coming through. So I think this is the time you need to have a break, or this is where you spend your time analyzing or getting new ideas, so that you can always be in the market looking for good trades and making yourself a disciplined trader. Now let's look at the questions. The pound yen forecast. Okay, when you trade on, let me show you the chart. Let me pull the chart, and see, when you trade, what give me a minute. Let me remove all the lines. Okay, this is a dollar yen. Okay, let me put in pound yen. Okay, this is a pound yen chart which you see on the daily chart. So when you trade on crosses, okay, what is my advice is, so you must understand how does the crosses work, or how does the crosses impact. So when you trade on pound yen, you should study, or you should analyze both the crosses, meaning the pound US and the dollar yen. So you see, when the pound yen moves, or whether is it moving down or moving up, you must understand that either the pound US would drag the pound yen lower, or the dollar yen will drag the pound yen lower, or when both are like dollar yen and pound US both are consolidating, then you do not expect a big move on the pound yen. So when you do this, when you understand this relationship, meaning in the sense when you understand whether the pound is weak or the dollar yen is weak, then when you take pound yen, it will be much more easier to handle. So try not to just look at this pound yen itself, right? So when you look at this chart, on this particular chart, for me, the way how I look at it is, it has been down for quite some time. Okay, let's say I show you that RSI. So if you see a RSI, it is already oversold. It has been down. So what I feel is, it is going to, the downside is going to be limited, right? If I'm going to draw a channel, okay, this is a channel. Yeah, can you see the channel? Right. So if you draw a channel here, see, the price has just resting along the second channel, and of course the maximum move I'm expecting is it should go like this. On this particular move, it should not go below 128. And again, this is I'm looking at my analysis on daily. But when I look on the hourly chart, okay, the hourly chart would give you a different picture or different scenario. Okay, let's see what is the hourly telling you. So if you notice on that hourly, if I am going to draw a channel, right? I mean, of course, if I see this, the prior low. Okay, let me remove this. So at least see the prior low, which is 139.90, right? Then after that, you see another. I think in fact that's the lowest low, right? So in fact the price has been consolidating around this level. So if I were you, if I'm going to look for a trade, if I'm looking to short, chances are, I have to be very careful on this particular trade, because as I told you, it is towards, it has been down for a couple of hours. In fact, I would say a couple of days, it has been down, right? So the next level, of course, if I see at about 132 or 133, that means another 600 pips. That's where, I would be looking to long, and I would register myself that particular level in my mind, meaning in the sense, okay, I know that, okay, right now it's trading at 169, and I have another immediate levels. These are going to be your immediate barriers for the bears. So I have like 136.50, 135.30. Of course, the maximum I look at on the hourly is 133, 132.80, right? So what how would I trade this instrument is, again, I do not want to do anything at this moment, because it has been consolidating. So whenever this happens, when you see a consolidation phase happen, chances are the market might turn, or it might have a one more drop. So what you should be doing is, you have to be very careful on this. So because and also I did tell you that you have to pay attention to the pound US and the dollar yen. So when one of the cross bottoms, okay, maybe I'll show you the chart on the dollar yen and pound yen. See this, if you notice on the dollar yen, is a similar picture as the pound yen. If you notice, see, it has a huge drop on this particular day, which is 4th Feb. So let's see what is the pound US. See, it is not a pound US is also dropping. So what is happening is, overall is the pound US is weak and the dollar yen is strong. So that's the reason why you see the pound yen a big drop on that particular day, which it happened. So here, if you see overall, you have to be a intraday trader. That's what I feel on this particular market, because because as it is approached, it has been down almost like 10 big basis points, from in fact, from 150 to right now it's about 130, 138, which is about almost like 12. So you should know that the downside is approaching. So again, you can be shorting, but you have to be very cautious, because you can expect the market to reverse anytime soon. Okay. Okay. The next question is why 12 levels in particular? Uh, you see, the thing is, let me show, get that screen back again. You see, this report, okay, we have come up with this report after like many years of research, okay, and is this 12, of course, we have put in 12 levels because basically, it can be valid for the whole day. See, our report, what happens is we publish before 5:30 to 6 GMT. So as a result, this report is valid from today 5:36 GMT to the next day. So, it is valid until the next report is out. So the reason why we use for this 12 levels, right, is because you must understand the fact that nowadays forex market is been pretty volatile. So you can see sometimes, like 300, 400 pips move within the day, right? So this is the level, we have come up, and also that the levels is not like the numbers is not like any kind of numbers. This numbers has been derived from so many tools, technical tools which we use. Of course, we use Fibonacci numbers, which is one of our favorite, and we use Gann numbers. We use trend channel. Like earlier on, I showed you a channel for you to see where is the levels coming from, and of course we use a pitchfork, right? So these are the tools we use before we get to this numbers. And also you must understand, for those of you who have been using technicals or technical analysis, have you ever wondered why does this technical analysis tool works, or why is it working, or why is it not working? Have you all ever analyzed or wondered? You see, the answer is very simple, because you must understand that, okay, this trading is a game whereby the market is moving up or down due to supply and demand. So wherever the supply and demand is higher, meaning in the sense when the supply is greater than the demand, then the price goes down, and when the demand is greater than the supply, the price goes up. So as a result, you see, you are following the majority of the crowd. So what we are doing when you do a technical analysis, see, the majority of the crowd, different groups will follow different trading tools, because like some groups, they follow moving averages, some groups they follow trend channel, some groups they follow Fibonacci, and of course the Fibonacci numbers, even it can be a different set of numbers, need not be the same set of numbers you use for the Fibonacci, and you have Gann numbers or pitchfork, any tools which they use to get the numbers. So what happens is different groups will follow different tools, and whenever the market touches that levels and moves, you know that, okay, that is the group that is controlling the market. So as a result, you see this, the technicals do work most of the time. Okay, I wouldn't say 100%, because there isn't any tool that is 100% guaranteed, but most of the time these tools would work nicely and precisely. So you can follow any of these tools. So what is so special about our report is all these tools are already inbuilt. So as a result, you can use these numbers to take trades, which is much more easier to take your trading decisions, right? So the next question is, are the levels based on different time frames? Okay, the levels is based on purely on the daily. Like as I told you, this report is valid for the day. So this is purely based on for the daily time frame. So you must understand how the system works or how the market works. So like let me show you this example. Okay, this New Zealand US is 68.55. Let me put it down. 68.55, 68.05. Right? These are the two levels of zone 1's resistance and support. So if you look at the previous day, which is yesterday's report, you can go and get this levels from our website. The previous day zone 1s are 69.20 and 68.70. Okay, let me show you on the chart to see what happened or what has happened on the previous day. Okay, the previous day on this particular instrument, okay, is 69.20 and 68.70. I told you just now was 68.70, and remember it is plus minus 5 pips. Okay, today's levels are 68.55 and 68.05. Okay, so if I show to you on a 5-minute chart, okay, let's look at from yesterday, right? So this is let me see, this is a 5-minute chart. Okay, this is yesterday, right? So if you notice, this is yesterday, right? So what has happened is the price has went about 69.20, which is our resistance zone, and you see it has dropped all the way to the, in fact, the previous support zone, which was 68.70. In fact, yesterday's support target 2, which is 68.55. This is where the maximum move it has happened yesterday. All right. Then it was consolidating around that 68.70. Then it started to move up. Then when it came back again, you see, the market is resting here. Then it dropped. Once it breaks that 68.55, you see the market having a free fall. Again, now it is coming back to see, like remember I said the previous resistance or previous support would become as a resistance or support. So on this particular here, so the price would find very difficult or very difficult to clear these two barriers, which is 68.55 and 68.70. So this would be a selling opportunity or shorting opportunity on this scenario, because you know that the price is approaching a resistance levels. So you should be looking forward to take a trade on that particular levels. So when I do this, okay, chances, like as I told you, my emotions is at bay, because I know that these are the levels whereby I'm expecting the market to find some resistance. So when I take my trade even at 68.55 or even 68.70, I know that my stop is going to be somewhere here. So the chances are, I wouldn't want to bother, or I wouldn't want to be really wait for my emotions to control me, because I know that, okay, if this is where I'm expecting the market to reverse, and this is where I plan to take my trade. And this is just an example which this is just an example which I chose randomly, and I'm just discussing this on a random example, right? So the next question is, this is based on 5-minute, not daily though. You mean valid for 1 day? You're right. Basically, this levels is worked out or projected based on valid for the day. But you can use the levels as low as even a 1-minute chart, because in fact I use 1-minute chart to take my trade decisions, because when I do that, that's where I know that I have a minimum stop, which is about 30-35 pips. So if I use beyond that, then chances are I might need to put a bigger stop loss, right? So this is how you use it. That means the levels you use, that, okay, in fact, I can give you another example, how does this, to relate this price. Okay, you must understand that any Newton's law, for example, like an object moves, right? So you should know that, even like, for example, you want to board a bus or train or a cab or whatever, transport which you say. So you do not run or get into a running bus or a running train or any transport which you are looking at. You have to wait for the particular transport to come into a station so that you can take a trade. So the same thing goes on the price. See, all this, whatever we do, we apply law of physics on most of our analysis and most of our projections and all this stuff, right? So you have to wait for the price, and that these are the where, like as I told you, this is where the price gives you an opportunity for you to take a trade, because this is where that the price is going to consolidate. If I show you on a 1 minute chart, maybe, can you see here? This is a 1 minute chart. So it came all the way, it touched that level, then, it had a pullback. So I can take my trade, even here. That means buy the break on this with a stop loss. So it all depends on, what kind of trend I am looking at. Because if I know that my hourly trend is up, so I should be looking to buy on dips. That would be the safest and the best possible trade. So this is one of the way whereby you can use this to analyze and take your trade. Try not to mix with too many indicators, too many oscillators, because by the time you get mixed with too many things, because sometimes what happens is one of the oscillator will tell you a buying signal, another oscillator will give you a sell signal, so you do not know which oscillators to follow. But when you use the price principle or the price level strategy, you should know that the price should turn in this particular level. So on that way, you may not get yourself mixed up with too many tools or too many indicators or oscillators, because end of the day you must understand that price is the king. Okay, so you have to follow the price. Okay, the next question is, can you show the pound USD example? Example in the sense, because do you want me to show based on yesterday's report or based on today? Because today's report is not ready yet. That report will be only out before 5:30 to 6 GMT. Or you want me to just discuss on this overall? I would not mind discussing this. So you tell me what is it you're looking forward to discuss on this particular instrument. So here, if you look at this pound USD, if you notice, okay, overall it has been down, right? And what I feel is, okay, this has been down. Let me draw the channel so that at least I know where is it heading, or how far is it heading, or how far is going to go down, right? So if you notice, this is the channel which I look at, and see, so what I see on this particular tool is, okay, it has been down, right? So if you see on the RSI, right, it has been hit oversold. Right now it is pulling back, so it is trying to find its bottom, right? So the levels which I would like to pay attention to is, of course, this is the immediate, this is the tool which I'm using. But of course, as I sit down and analyze, I'll be giving you a better levels. But at this instant, what I see is 54.80 and 54.40. Okay, these are the two levels I would like to pay attention for the price to bottom. So right now, as it is, okay, I don't feel that the price has already bottomed, but these are the levels whereby I would like to pay attention, or even 153.60, which is the maximum level I used to I expect this price to bottom for this down move. So what should happen is the price should bottom around this level. It should have a pullback. Then again, it should go for the next round. So we are coming towards the end of this down move, which we are calling, or which we are discussing. So this is a corrective down move. So you should know that we are approaching towards the end of the down move. So we have to be extra careful, right? So I hope I've answered your question on this. Please feel free, if you have any other questions, we can discuss. Otherwise, we have another session which is coming this Friday. That is 12 GMT, right? That's about 12 GMT. So feel free, if you want to come back to that session, feel free to register, and we can have a discussion based on this, because as a group, we know where is the market heading, how to interpret the market with the least risk, right? So you have no other questions. With that, I would like to thank FX Street for organizing this session, and I would also like to thank you for coming to the session, because it has been a session whereby, because you must understand that we trade the market, right? And like as I told you, the market is consolidating. It is not going to move anywhere. So I think this is the time it is best for you to sit down and analyze and wait for a better trading opportunity, right? So with that, I conclude today's session. Once again, thank you and have a good day. Goodbye.